Hi, my name is Dan Fowler. I'm founder of the Apartment Owners Association of California, one of the largest individually organized groups of apartment owners in the state. And we are protesting, folks, and we're asking you to join us as a protest against these moratorium, against the rent control, all the way that apartment owners in our industry has been treated by elected officials today. Please join us. Now, how can you join us? Say, yeah, Dan, I don't like this thing, even though you may not have been affected directly. Other owners have. Our industry has been affected, and also they're going to do it again in the future. Some little thing comes up, they're going to do it to you, and you could be affected in the future. So let's do something now to stop this ridiculous thing of asking you to pay for the people to live, to pay half of their living cost. A third of their living cost, at least, is what they're asking of you as a housing provider. So join us in this protest. There are three basic steps that I'd like to ask you to take. Number one is to send a form. Now this isn't we're not asking you to go out in the street. We're not asking you to burn down buildings and steal stuff out of stores. We're not asking you to do that. From the comfort of your home, we're asking you to download a form and send it to the governor. He's very vulnerable right now. He's under a recall. He's going to pay more attention to your ideas right now than any other time. So please do it today, and we'll tell you where to download the form. If you received the magazine, you got a copy of the magazine on the back page, you can just tear out that page of the magazine and send it to the governor. The governor's address is right there on the form, and we'll show you how to download this form if you didn't get the magazine. Again, the magazine, the front cover of the magazine, shows you that we are protesting. One of the largest protests our industry has ever conducted, and we're asking you to join. We need every single apartment owner, every single housing provider out there to join in on this protest today. Send that form to the governor. And again, we'll give you in print, get a piece of paper and pencil so you'll know where to get the forms. You can download them on your computer. Just go to aoausa.com/protest. And we'll show you that later on here just in a couple minutes where to go. So get your pencil and paper so that you can write that down. Number two, do that, at least do that to the governor. And if you feel like you're a small part of this industry, then also make a copy of that form, send it to the mayor of your city. Like if you're in San Francisco or Berkeley, Oakland, Los Angeles, San Diego, Orange County, send it to the city council members and the mayor of your city. That's all we're asking for this protest. If you'll just do that, they'll hear our voice. They'll hear the voice of the industry for this thing. So you're going to send it to the governor, you're going to send it to the mayor of your city, and the city council members minimum. And if you'd like to go further than that, you can send it to your assembly representative and also to your Senate representative if you'd like to carry this on. You can go even further by making phone calls to these people. You say, well, how do I get their address? We're going to give that to you right now. Well, it showed up on the screen where you can get the address of these people. Again, the governor's address is on that form. You can get the form by going to aoausa.com/protest. We'll put that up on the script. Well, we can show you the form that you're going to send. You want to download these forms. If we can get that form up on the screen, this is where you're going to send the form. aoausa.com/protest. Your city council members, if you'll just Google, like you put in San Francisco city council members, or Los Angeles city council members, or San Francisco, whatever city that you happen to be in, followed by city council members, and Google that, and it'll give you the mayor's name, his address, it'll give you the city council members and their address to send the form to. So, or send it to the assembly members, and that's where all this nasty stuff is coming from, a good part of it. If your city does not have rent control, then it's coming from the assembly with the statewide stuff, and you can just Google California Assembly members, and you can look up, it'll show you how to look up the assembly member that represents you in that city. Let's bring the forms up here that you're going to be able to download If we could get the forms up on the screen, this is the form that we're asking you to send the governor. As you can see, the governor's address is right on there. Makes it easy, and you can put Dear Gov on there, and also write in anything on that form that you may like to let the governor know. If you're having a hard time, if you've got somebody stealing from you, you've got tenants in there that are bothering all the other tenants and making life unlivable for them, tell it to the governor. Let him know that's there. If you don't, if everything's going just smooth for you right now, then tell the governor how anti-American this whole thing is and how socialistic and Bernie Sanders-like this whole program is that they've brought on us, that we've done it. Now, step number 2, that's step number 1, asking you to mail this form to as many politicians as you possibly can. Now, you can download the form. Again, can we bring up that address where you can download this? You can download it at aoausa.com/protest to get the forms. So to go to Google and you can get the addresses of those people. Again, the main thing is get it to the governor. Please, please join us in this protest, one of the largest. We can send 100,000 protests to him, and you say, well, he's not going to read mine. I'll just send one little letter. Well, if he gets 100,000 of these things, or even gets 500 of them, he's going to read one of them. And so send this form in. Number 2, you want to join AOA. Get the magazine. Again, here's a copy of the magazine that came out this month. Get a copy of that magazine. Read the articles that are in the magazine. And also just tear the back cover off. You're just going to tear the back cover off of that magazine. Send it to the governor. That's what we're asking you to do. So join us together. Join AOA. Join us as a member and become a member of the association so that you receive copies of this magazine. The $79 a year, the magazine alone, the subscription, is worth that, regardless of where you get your tenant screening and the advisory and all the other services that we have to offer there. Number 3, that's number 2. Number 3, donate to the Political Action Committee. Donate, really, we're talking to the attorney now about filing a lawsuit against these moratorium or joining another lawsuit that is further along the way in getting to the Supreme Court. But we want to take a case to the Supreme Court if you can, and it costs hundreds of thousands of dollars to do that, so we're asking you to donate. You can donate at aoausa.com/PAC, or go to that first one that we gave you in going to the protest, aoausa.com/protest. You can also find a form on there that you'll be able to, that'll take you to the donation form. We want to thank you for being in. You're in for a real treat. It's a great speaker. It's a very popular speaker that's coming on today. And Jeff Fowler, president of the Apartment Owners Association, will be introducing her to you. Jeff, it's all yours, and thank you, and do join us in this protest today. Thank you.
Good morning, everybody. Well, let's get started, right? So this live stream is sponsored today by Karla, Dennis and Associates. They are your tax experts. They specialize in helping you keep more money in your pocket, and they have saved their clients thousands and thousands of dollars. You're going to hear all about that today, and so we're very excited to have them on with us. And just want you to know that there will be a time for questions at the end. There'll be a live Q&A. Hold your questions now, and because she's going to say a lot of different things, and it would be better to ask questions that are on topic, right? So just hold your questions, and then you can put it in that little blue chat box if you're on the AOA USA website and watching from there, or you can just put it in the chat boxes on YouTube and Facebook. And also just want to ask you to subscribe. If you like this kind of content, go ahead and subscribe. You may have, if it's your first time, you can look at our channel, search for AOA USA on YouTube, and you'll see that there's all kinds of content there. In a couple, what do we have next week? Are We in a Bubble About to Burst is next week. And then after that, we have one on ADA compliance, how you can stay compliant or become compliant. And all these are things that are either going to help you save or make more money. And so that's what our goal is, to help you get there. And all of these live streams are on that purpose. So go ahead and subscribe. And we're not monetizing this. It's just so that you don't. It's just to keep you in the know. We also do have an email list that we want you to sign up for, because we just want you to know if laws are coming out, if there's something to rally to where we need you to call your city council members or write another letter or whatever. We need to rally to where we see things where bad laws are about to be made. And so the government, they need your feedback. So go ahead and sign up for those things. And then, so our speaker today, she is the CEO and founder of her company. They have over 20 associates working with them. And she's been featured in Forbes, and she's been on Yahoo Finance and so many different publications. She's authored 2 books. She has a master's in taxation and master's in taxation. And so it's really different, and she will explain what she does and why she knows more about this than just about anybody on the face of the earth. So it's my pleasure to introduce to you today Karla Dennis.
I absolutely love talking about taxes. I eat and sleep income taxes. I've been doing this for quite a long time, and it is my pleasure to serve AOA today and to bring you the latest and greatest in tax law changes, to let you know how they are literally going to impact you. And we're going to be doing this for years. I am the CEO of Karla Dennis Associates, Inc., and I run this company with my 4 sons, who will be here for years after I am gone. So I am excited to teach you today, and it's such a pleasure to be with you. I want you to learn today what the administration policies are currently that are going to impact you. It's so important that you understand the current administration policies. It's important that you understand what changes are currently in place, what proposed changes will impact you, what is on the table in this infrastructure bill, and what is that going to look like for you, your taxes, and your investments. And most importantly, what can you do to mitigate this impact? Because it's coming and we can't stand still. This educational platform is so important that you're getting from AOA to educate you so that you can understand what it is that you need to do to really protect yourselves and to really be aware of what is happening. So, what are the policies that are on the table? Whenever there's an administration change, there are policies that are on the table. There are things that every administration wants to put forth in terms of new laws and new things that they want to accomplish. But I always say to you, every new law comes with it a tax law change. Because if there's going to be money moving, that money that is going to be put in circulation is going to be paid by somebody, somehow, some way. So I want you to understand what the policies are. This particular administration, and I challenge you all to go out to tax.org and get educated yourself and understand. This particular administration is talking about putting higher taxes on higher income earners. What's a higher income earner? Currently, that's anybody between $250,000 to $400,000 and above. And that may mean on any given day, any given time, if you're selling property, you can jump into a high income earner bracket very quickly. They're giving out more tax credits. You've heard this in the news. Tax credits are being given out, more money in circulation. And their policies are about increasing taxes on corporations. And that's important that we know that, because corporations employ individuals, right? They employ our workers. And so this is a lot of the policy positions of this particular administration. And so what are some of those policies and how does this work? Well, hopefully the checks and balances that we have in Congress, the House and Senate, will help to equalize some of what is happening. Hopefully, those individuals that will pass laws or not will be looking at both sides of the equation, and they will make sure that there's equilibrium across the board. But I will tell you, there is still a lot of work to do. I will continue to keep my eyes and ears to the ground. I will continue to read these bills before they become laws so that I can educate you and bring you this great information. What has currently happened since this administration has taken place? What tax law changes have occurred? You know, we always talk about that first 100 days in office. And that first 100 days, when there's a lot of movement, that's when we're starting to see a lot of changes that are sneaking in that we don't even know about because nobody's really talking about them. They're talking about the first one or two changes that may have transpired, but they may not be talking about changes that are in these bills that have passed that are going to come rolling in here in the next couple of years that are going to impact all of us. So I want to spend some time going over some of the things that have already changed, some things that have already occurred. And many of you, I'm certain, are already familiar with a lot of them. For example, one of the changes that were put in place was about the pandemic unemployment. The law said the first $10,200 of unemployment received would not be taxable. That was something that changed in March of this year. Some other laws that changed were also the child tax credit. That American Rescue Plan put in and expanded the child tax credit. The only thing that really is a little bit disturbing about this, I can't take advantage of it, but a lot of people can take advantage of it. Those who have children that are ages 17 and below are going to benefit from this credit. This credit started literally being advanced to taxpayers today. And what this credit really is that if you have a child that is 6 years and below, you're going to receive up to $3,600 additional dollars per child. From 7 and above, you will get an additional $2,000 per child. And they're going to advance half of it, literally starting today. Taxpayers should get deposited in their bank accounts from July 15th all the way through December, an advancement of this credit. That's a big deal for a lot of people, but be careful. It's an advance. It's not extra money. It's a prepayment towards what you would have received when you filed your taxes in 2022 for 2021. It's an advance. So be careful, realize that. But some people need to get that money now, but recognize the caveat. In addition to that, it was the stimulus checks that came out. They started last year in 2020. There were a couple of stimulus checks that came, and then the stimulus checks rolled in 2021. There were so many different issues associated with the stimulus checks. Some of them were going out to people that were no longer even with us. Some of them were being deposited into wrong bank accounts. Some of them were going to fraudulent individuals. Money was being put in circulation. But because there was so much money put in circulation, that money is going to need to be repaid back to our government some kind of way, either in increased tax rates or by eliminating tax deductions. And so we're going to talk more about that in this presentation. The other thing that transpired is the dependent care credit, trying to get people back to work. They expanded the dependent care credit, wanting it to cover at least 50% of the cost of child care and care for other dependents. They expanded it, care for other dependents. For example, elderly parents that may need care. So that credit has now $4,000 up to $8,000. And that credit has made itself permanent and refundable, meaning you can get money back in your pocket. Again, money being given out. This is good for working families, and a lot of them need support when it comes to the child care for their children. And I want you to also be aware of other proposed changes that are going to impact you. And when I say impact you, I'm talking about anybody that is a business owner. I'm talking about anybody that's an investor, anybody that owns any type of business. If you are associated with real estate in any way, shape, or form, if you are associated with a corporation in any way, shape, or form, if you have any type of business, you are going to see an impact of these proposed changes that are coming. So I want to make sure that you are aware of what you need to look out for. So, is Joe Biden going to raise taxes? He says he's not. Is he going to? Let's look at what's happening. A few tax hikes that are coming are tax rates for households that are $400,000 and above would increase from the top tier tax bracket of 37% to 39.6%. That's only on federal income taxes. If you're in a state that has state income taxes, it's going to add on top of that. So if you can imagine, we add another 8 or 9%, we could almost be right at just shy of 50% of income getting hit with tax. And that's a huge tax bill. Proposing that itemized deductions, the write-off of our mortgage interest, the write-off of our property taxes that are already capped, our state and local taxes are already capped at $10,000. They're proposing a cap of itemized deductions of 28% of your modified income. That's a big deal for a lot of people. That's a huge deal. And households that make over $1 million will not be able to take advantage of the long-term capital gains rates because those rates will be eliminated, and you again will be hit with ordinary income tax rates at 39.6%. Who will this impact? Well, let's think about that for a moment. If you're in a state where property values are high, California, New York, New Jersey, for example, you may be making less than $400,000, but if you sell property, you could easily go over that $1 million threshold. So do not just think that you have to be currently making over $1 million. Don't forget about it can include sales of stock. It can include sales of your cryptocurrency and other things. We want to be really mindful of what's really, really happening. And they're also talking about raising the corporate income tax rate. Right now, the corporate income tax rate is at a flat 21%. They're talking about increasing it to 28%. That's a 7% increase for corporations. That means that corporations are going to have less dollars available to employ individuals, less dollars available for infrastructure within their businesses. So that's something that is going to be impactful. They're also talking about increasing individual tax enforcement and enacting new reporting requirements for financial institutions. This is where the administration is putting $40 million into Internal Revenue Service. 40 million. They're hiring new auditors. They're setting up a bigger cryptocurrency division. They will be going after business owners. They will be going after the construction industry. They will be going after the real estate industry. How do I know this? Because if you Google and read, you can read what the administration, the Treasury Department is planning in terms of their enforcement to collect more tax, Because if our government is going to give out money, there has to be a mechanism to bring in money. And so this enhanced enforcement is going to do that. They're also talking about putting back in place the first-time home buyer tax credit. I think this will incentivize some of the younger people who may or may not be thinking about purchasing a home or have a down payment to get into purchasing a home. But again, it's money being given out. It's a tax credit. And let's remember, tax credits are dollars that are given to you. Dollars that are given to you. That's an important distinction between deductions. Very important. That's something else that's on the table. Again, we're talking about the Joe Biden policy and administration, tax law changes, and how they're going to affect you. And remember, when money goes into circulation, tax credits, stimulus dollars, all of those things may be very important, but how are they going to be paid for? There's going to be an increase somewhere. And one of the biggest increases and concerns that I have in this infrastructure bill is limiting the deferral of capital gains taxes. Right now, a lot of real estate investors enjoy the benefit of being able to sell a property, exchange it into another piece of property, and defer those gains when done properly, defer those gains and be able to step up and do it tax-free, right? Defer, defer, defer. So many investors sell a property, buy another property, defer the gain, sell that property, buy another property, defer the gain. This has been the strategy for years. Now, the administration is coming in and saying, hold on a moment. We are only going to allow deferral of gains of not more than $500,000. Not more than $500,000. I can tell you that sitting in the seat of a tax strategist working with clients all across the United States, touching almost every state, that this is going to impact a lot of individuals. This is huge because if you cannot defer your gains, that means that you're going to pay tax. If your income is up above the threshold, you're going to opt out of being able to have the lower capital gains tax rates, and you're going to go into ordinary income tax rates. If your gain is $500,000, $400,000 on top of your income, you're going to be sitting in that tax rate of 39.6%. And remember, that's only the federal tax rate. So this is a very, very important thing that is in this infrastructure bill that can really impact us as real estate investors. It could really impact those that are thinking about deferring their properties, people that have transactions on the table as we speak. Will this law pass? Will it be retroactive? Will it be as of the date that it passed? Do they have the power to make it retroactive? They do. Absolutely. So this is definitely something that I want you to be mindful of. And so in times of this type of change, where Americans may be paying capital gains as high as 43.4%, these changes may hit homeowners in this hot market that we're in right now. The market is on fire. I'm sure a lot of you pay attention to this. A lot of us are in this market. That's why we're here today. You're in a great place right now, getting great education. It is just so incredible in what is happening. But I am telling you, you really, really have to pay attention to your tax bill, because once your tax bill starts to increase, it's not just the income tax, it's the net investment tax. It's all the other taxes, the alternative minimum taxes that are just going to go through the roof for you. So we really got to pay mindful of these changes and really think it through as we're thinking about what we're doing, because this is serious business here. Now, what is the key for you? How can you mitigate taxes in such a volatile, changing tax platform? When you really think about it, our climate as it pertains to tax laws, the landscape has been very, very, very dynamic over the last year. There have literally been 6 significant tax law changes in the last 365 days. I've been in this industry for a very long time, and I want to say to you, this is the first time in a long time that I found myself going, wow, I can hardly keep up with all of these changes that are taking place, because every single one of them impacts our decisions that we're making. Every single one of them have different dates in which they are going to be enacted. And so it's really hard to navigate it. That's why I enjoy this educational platform that AOA puts forth, because it allows you an opportunity to get this information and get it timely. The way that you are really going to be able to mitigate tax is you really, really have to plan. And I do mean, if ever there was a time for anyone to think about planning strategically, it is now. The time is absolutely now, because you have to plan for what is happening in 2021. You need to be looking out for what is in the bills that are being proposed. And I don't think, and this has never been my position, I don't think you should ever wait for that law to actually change before you start to plan. You got to start planning what if scenarios, because we have to get it right. There is typically too much money on the table for taxpayers like yourselves, people that have worked hard to acquire their wealth, to put it all up to chance, right? It's too important to do that. I mean, we see these different cycles in real estate where we see the markets going up and going down, and we see these massive tax law changes, but we haven't seen this type of law change in an extremely, extremely long time. And I want to say going back to 1986. So I'm going to tell you, you need to be strategically planning. You need to be planning, looking at where you are right now, currently, where you are today. You need to be looking at where you are headed. What is your end goal? What are you trying to accomplish? What do you want to do for your children? Are you passing along generational wealth? Are you just trying to get into the real estate business? Are you just trying to become an investor? What does that look like? What does your structure look like from the perspective of the type of entity you need to operate in? Where should it be located? Should you sell now, not sell now? Should you hold? Should you do a 1031, not do a 1031? There's so many things on the table. And I haven't even touched the fact that the whole cryptocurrency market and people invested in real estate through cryptocurrency and what IRS is doing with that arena, that's a whole nother challenge that we need to be educated on, because the reporting requirements for banks are being ramped up significantly. And IRS is going to know exactly what you're doing. So it's so important that we get educated, that we plan, that we are thoughtful, that we plan based on actual laws that are in place and actual laws that are pending, and that we really stick to real facts, and that we plan based around your unique circumstances, because everybody has a little caveat to their unique circumstances. That is why one of the things that I want to be able to do for AOA members, and one of the things that we are doing, is that I am offering a live coaching event. And this coaching event is going to be me live for 3 days. Karla Dennis. I am going to be coaching individuals like yourself who are in this real estate market, who are trying to get in this real estate market, people that are thinking about exiting this market, people that want to lower their tax bill, people that are concerned about where they are. I'm going to coach you for 3 days live, and we're going to show you how to reduce your tax bill with my 3-day tax challenge. AOA members get 50% off of that. Our normal fee for this is $110. I'm doing it at that rate, 50% off for AOA, $55. Why? Because I think it's so important that you're planning and protecting your dollars. AOA has been a great resource for all of us, and we want to protect its members. Our 3-day challenge is really going to help you do that. So I welcome you guys to click on this link and join. And I'm so grateful to AOA. I'm so grateful to you, Jeff, for allowing me to be here with your members, for having platforms like this to educate them. This is so important, because when the AOA members come to us, they have their bases covered. And we just want to continue to give back to you guys in this group and educate people. And I'm pleased to offer this tax challenge.
Wow, Karla, thank you so much. That is just, yeah, I heard it yesterday. I heard, I'm always asking, hey, is there something that incentive that you'd like to give to our members? And I heard the news that you're offering 50% off, and I was just, my jaw dropped. I was like, wow, Karla, thank you so much. Thank you. You and your whole team. So very generous. And I think that people will get a lot out of that. So, and wow, so many changes, so much going on. And Karla's going to give away this coaching event to 3 people. We're going to have a prize wheel. We're going to spin that. But before we do, you may have missed the beginning. My name's Jeff Fowler, president of AOA. And we're one of the largest individually organized groups of apartment owners here in the state of California. And our goal is to give you at least one idea that'll help you make and or keep more money than ever before, and to make the process of providing housing easier and more enjoyable so that you can leave a legacy. And that's what we're here for. I think that's what we're all in this thing for. And so we just asked you to join. And today, even if you join today, we just set it up so that when you join, you get free special reports and different things like that. And everything has been digitized, so you get it digitally. And if you, so there's even a special offer where you get an extra an extra video, an extra special report if you only take it digitally. So that's for all OA members. Doesn't matter if you can always extend. If you extend now, renew now, then you'll see some of those new features actually inside of your member account. So that's kind of a cool thing that's happening. And hey, she's talking about when's the right time to sell, all of that. Don't forget, if you're interested in selling, we give the free property valuations. And that involves a lot of time, and we do that really well. And so our brokers are here to help you with that. And so just want to give a little plug for them, since Karla mentioned that. But let's go ahead and guys, if we could get that wheel up, let's if you registered. So basically, how you get this is you have to register for the event, then your name goes in, and then we pop it out. So hopefully we'll get that going here. And then again, just go ahead and put your questions in the chat, and we should see the wheel here pretty soon. Okay, so it's going to take a little bit longer, a little bit longer to get that wheel going. Last time, oh, there it is. Here we are. Now we're gonna click this thing. You see all those little colors? That's lots of different people's names. So go ahead and click that bad boy, and let's see who our first winner is. All right, Faith Washington. You are the first one. Congratulations.
Yay.
So Faith will reach out to you. May I think. Well, congratulations to you. You've won as well. And so what we'll do is we'll give your email, your contact information. We'll give that to Karla Dennis, and then they'll be able to reach out to you. All right, last one. Here we go. Art Smith. All right, Art, congratulations. It's fun to win something, isn't it? So even if you didn't win, we could have put everybody's name up there and drawn a 50% off, right? But so everybody that's an AOA member, you get that. And so that's great, but we have questions here, so we'll go ahead and get to it. And all right. All right, on YouTube, Cynthia, what is income threshold where 1031 gains are limited to 500,000?
There is not an income threshold. The gains are just going to be limited to 500,000 if that infrastructure bill passes.
Oh yeah, and Karla, can you stop sharing your screen, and then they'll be able to see us a little bit more of us.
Let's see if I can make that happen.
There we go.
Share.
There you go. There we are. And what if 1031 property is held in an LLC? Any different on that?
No, the 1031 laws affect individuals, LLCs. It doesn't matter the title. What matters is the Rule 1031, which is a tax code 1031, Section 1031.
All right. Lauren on YouTube, I would appreciate more in-depth tax strategies to mitigate the taxes. Can you give us a practical maybe?
Yes, absolutely. The key is, Laura, that everybody's situation is different, but what I will explain to you, when you're looking at tax strategies to reduce your tax bill, I like to use an acronym called MERNA, MERNA. We look at maximizing your deductions. We look at your entity structuring. We want to make sure you have your basis covered for retirement. Then we look at advanced strategies and niche strategies. And each one of those are based on your unique situation. And so as much as I would like to give out strategies, I would need to know your situation in order to do that.
All right. On YouTube, we have Reverend Joy Alameda. A client asked me about ILTS's MoneyWise article by, hold on, I can't read that. ILIT's MoneyWise article by Clayton Jarvis, June 17th, 2021. He's in his late 70s and seems hard to imagine any form of life insurance would help him. Hard to can you figure out a question out of that?
I'm not certain, but I know what I've been hearing lately. A lot of people are asking about life insurance as a tax strategy, the bank on you stuff, the IULs as a tax strategy. There are tax strategies around life insurance. There's hundreds of them, really, to be quite frank. So I would imagine that this person is talking about some type of strategy around that.
Right. All right. Here's Doris on YouTube. How about doing a charitable remainder trust sale of your property? Donate to nonprofit which doesn't have tax affecting them. Would that be possible?
Yes. Charitable remainder trust, charitable lead trust, CLATs. There are a lot of different trusts that you can put in place to donate your properties, take upfront tax deductions. There's trust that you can put in place, donate your properties, and actually get upfront tax deductions and get the properties returned back to you later on down the road. Again, caveat that with the right strategy for the right person.
Great. On YouTube, Jay Price, any rumors that recapture of depreciation will change in any way?
No rumors on that. Depreciation recapture has been in the tax codes for a very long time. I do not see it going away, because if it were to go away, it would help taxpayers and it certainly would not benefit our government. So with this current administration, I do not see that being on the table.
Right. Okay, here's Darius on Facebook. What do the tea leaves say about monkeying around with the step-up basis?
The step up in basis is definitely changing from the estate side of the equation. So one thing that we have to look at is, are you going to be giving property away, not giving it away, but donating your property to your children, transitioning your property to your children, and depending on the value that you have, you may want to be looking at doing some estate planning with your attorneys, because that is also changing.
Great. Okay. On YouTube, Eurohead, have any landlords been able to get the economic injury disaster loan money?
Yes.
Yeah. So it says they were solicited, but then he was denied. So
yeah, a lot of property owners that were in LLCs, had their business set up in an entity, I can definitely say received EIDL loans.
Great. Rent is due. Nice little YouTube name there. Do the monthly child tax credit payments that start today phase out at a certain income level?
They do phase out at a certain income level, $400,000 if you're married filing joint, and $200,000 for all other households.
Okay, here's another good question. What if my income is higher for tax year 2021 than it was in tax year 2020? Would I owe the advance payments back?
Yes. And that is exactly what's going to be the issue for a lot of taxpayers. That money is being given out based on 2019 and 2020 returns. If 2021 is different, remember, this is an advance. So it will be reconciled on your 2021 taxes in 2022, and you could possibly owe. You could also opt out if you choose to by going to irs.gov and making an account to opt out as well.
Great. All right. Here's Darius again. And so what I'm doing with the questions, we're pretending that we're at the $1 Million Trade Show, even though we can't be there right now. We're just pretending, and we're pretending that everybody's in a line. And so you get one question, and then you go back to the end of the line, and then we take it. So that's what we're doing here. Karla knows the drill. She's said it many times, as many of you do. But if you're wondering, well, why aren't you answering my question or all of my questions? It's because we're just trying to let everybody get in. So if you have a question, you can jump to the front of the line right now, because there's lots of second questions. So here we go. On with Darius. How scrutinized are 1031 exchanges by the IRS? My ex-wife took exchange proceeds from our community property and bought a principal residence. Nothing so far from the IRS.
That's a great question, Darius. So the IRS does not scrutinize 1031 exchanges typically. Typically, the state scrutinizes the 1031 exchanges. The audits usually come in from the state on those transactions, at least in the state of California. Is Darius in the state of California? Do we know?
Most of our audience is going to be from California.
Then state of California for sure are the agencies that audit the 1031 exchanges. IRS audits income tax audits all the time. The state of California audits the 1031 exchanges because the state of California requires that 593 form to be filled out when you're selling property. So they pick up that form and they're auditing from that form. What I can certainly say about that is those audits have increased. And another thing that I would like to say, and Darius brings up a good point, is that for the individuals that are 1031ing and leaving California with their properties, you still are required to report to the state of California every single year. You have to include a form in with your income taxes. The Franchise Tax Board has launched a team now that is going back through their records on 1031s and are looking to see if this is being done. And those audits are now popping up.
Right. I love, last time that you spoke, it was in Long Beach, and I just remember what you shared. This is a different topic, but I just loved how straightforward you are, and you're like, you just tell the whole truth. Tell the whole truth. Give them everything. If you don't have proof for it, you can't say it. So just don't even try to report it.
Don't do it.
So you have such a clean MO. So I like that about you. And here's Sherry Cleary on YouTube. When does Biden's proposed tax law may come into effect regarding the capital gains?
Any moment. That's what we're waiting on. That's the big deal in the infrastructure bill. That's the war on the Hill right now. I'm watching every single day. They're talking about it. I would anticipate that we're going to know something within the next 30 days. And then the question is going to be, when is it going to be in effect? My gut is the day that the law is signed is going to be the day that it changes.
Right. And I know you don't have a crystal ball, but you may have you may know some people in Washington. And what's your feel? Do you think that what's the chance of rain here?
I don't have a crystal ball, but what I think about is the way that our Congress is currently situated, right? That The Democrats are pushing it. The Republicans aren't. The Democrats can get the laws passed if every single Democratic person votes in favor of Biden's bill. It will pass. So if we are able to flip one Democrat, it won't pass. I don't know. I really think that everybody in Congress, and I say everybody, let me caveat that because I don't know that to be a true statement, but I can definitely believe that the majority of those people sit on real estate. And I do believe that probably they'll get some of the Democrats, one or two, to flip. I just don't see it passing. My gut is like, it's scary. But I will say to you, I want to say it was back in 1986, 87. I'm dating myself. I'm still only 30, and don't forget it, everybody. I remember on the front page of the Times magazine, they never thought that they would put a cap on the amount of passive losses an individual could take. And they did. They said it would never pass. It would never pass. So that's how we ended up with individuals that make over 150,000 can't take passive losses. And that's how they came up with the real estate professional rules. So that was historic. You know, with everything that's happening, I don't know on this one, Jeff. I really don't. It is really up in the air. But I can say if it does, it's going to be earth-shattering.
Wow. Hopefully, you know, if anything passes, hopefully that'll get carved out of it.
Yes.
Chopped off.
Yes.
All right, Lauren on YouTube. What will be the inheritance cap with no taxes this year?
The inheritance cap with no taxes this year, you're still at the 5 million for an individual. That hasn't changed. I don't think that this is the year that you necessarily need to be concerned, not yet. But if that bill passes, you will need to be concerned.
All right, Mona, thank you for your question. Is it a good idea to get out of a 1031 exchange now?
No, I don't think it's a good idea to get out of a 1031 exchange now. I think that we have to be business as usual. I think that if I were in your shoes, that you're under contract, it sounds like you're under contract right now. I would imagine that in the law, they're going to carve out something that says anybody that was in a bona fide contract as of this date are going to fall under the old rules. So I certainly wouldn't exit a 1031 now. However, if I were to get into a 1031 after this law was changing, right, I would probably stick to my 1031 to allow my $500,000 to be excluded, but then I would work out a strategy on the remainder of the gain. I guess what I want people to realize, Jeff, is that don't change your ability to step up and buy more real estate. Don't change your strategy of accumulating wealth. Don't change that piece. That's so important. What you got to change is how you think about your taxes and put a plan in place. We don't want to stop buying and selling real estate. I mean, that's just kind of how we make money in this world, right? Real estate, oil and gas business. We don't want to stop that. We just want to be strategic about it.
Great. All right. Here's Denise. Please re-explain the MRNA acronym that you use for tax reduction strategies.
Yes. So for me, when I am going to be doing tax reduction for anybody, and this is something I'm really going to lay in and teach on my 3-day challenge, I always look at what does a client have right now, like maximize the deductions they currently have. A lot of you are sitting on deductions right now that you're unaware of because no one has taken the time to go through everything that you pay and say, okay, this could be a deduction. This is not a deduction. This would be a great deduction. No one has done that. So it's almost like you're going to create a meal. You're going to go shopping. You're going to put together dinner for somebody. If that were going to happen, my husband, for example, would just go to the store and buy all the ingredients. I'm going to look in the cupboard to see what we already have. So as a tax strategist, I want to know what you have right now that we can work with. That's step one. Step two, do you need to be in some type of entity, LLC, S Corp? What does it need to look like? And explain the why to you. Step three, which I think
E is explain.
E is entity structure.
Entity structure. And what was the
Correct.
M? Sorry.
The M is maximize deductions.
Okay, maximize deductions.
Entity structure.
Okay,
R is retirement planning. N stands for niche strategies. There's strategies around real estate. There's strategies around kids. There's strategies around business. Niche strategies. And then the A stands for advanced strategies. People that are sitting on a lot of money are going to do advanced type strategies. And I, over the years, Jeff, have created what I call my Bible of tax strategies, where I have gone through every tax law since 1986 and created this document where I'm updating the law, the rules, the regulations to it. And it's just something I created over time that I use in working with clients. And it's very useful because anytime we're going to make a recommendation, we don't want to back it up with hearsay. We want to back it up with laws. We want to back it up with facts. I like to do things based on the reality, as you said. I like to follow rules. And I'm going to go to the rules, and I'm not going to Google. I'm not going to look at a website. That's not necessarily a rule. It's a guide, but we want to always operate from law.
Great. All right. That was a good question. And here's
Excellent
Rita.
Question.
Here's Rita. With Biden's tax deal, is the 250,000, 400,000 income gross or adjusted? Or
adjusted gross income.
Could you say that again?
Adjusted gross income.
Okay, it's adjusted gross. There we go. All right. Bethany on YouTube. What do you think the chances are the 1031 $500,000 limitation will become law? I'm trying to plan to decide to sell a property and purchase another one. My gain would be around 4 million.
Yeah, Bethany, I wish I could answer that question. I would say if I were a betting person, and I'm typically not, I don't know. I think that I would do my transaction and I would exclude my 500,000, but I would have a strategy for my 3.5 million. There's other things you can do. If you're going to come in at 3.5 million, what are the advanced strategies that you can utilize once you've exhausted the niche strategies of the real estate? What are the advanced strategies that you can utilize? The reason why I say that is I never want anybody to think I don't want to make money or get money because of taxes. You want to make all the money, get all the money you can. But you have to realize that there are people that make a ton of money in this world and pay zero tax or very little tax, and they do it legally. So how is that happening? Right? They're planning around it. So you can too.
Great. Thanks, Bethany, for that. And, next week we have H&S Wealth that's coming on. They do the 1031 exchanges.
Yeah.
We'll have like a market update. And again, you can always look back at other videos, but that's one you could ask them. And a lot of it's just, we don't know yet, right?
Yeah, we don't know yet.
Yeah. Okay, CJ, what is the likelihood that the stepped up basis will be terminated?
That's another, we don't know.
Right.
We really don't.
Okay. Rent is due. Is the RE real estate professional designation on the chopping block as well?
No. That's not on the chopping block from anywhere that I have read.
All right. Cynthia, again, is the 500,000 1031 gain limitation per property or across all of one's investment properties?
That's a really good question. My gut is per property. They have not stipulated differently. Per transaction.
All right. And then
Ooh, that just made me think of a strategy. That just made me think of something. Yeah, per transaction.
thanks, Cynthia, for that one. Rebecca, can you please provide examples of advanced strategies that you're referring to? Everyone likes,
Absolutely.
you're talking to nuts and bolts people here.
Yeah, absolutely. I can provide examples of advanced strategies. So one advanced strategy may be I do what we call a
Hey, Karla,
slap.
how about this? How about give us a kind of like a case study of someone that you use an advanced strategy with, how
Yep,
much money you saved them, and just so that they get a meat on the bones type of deal.
absolutely. I love to do this. So here's an example, and I'm going to give lots of examples in my 3-day challenge. I'm going to walk through example per example. So I had a client, doctor client, owns a ton of real estate, 13 pieces of property. He owned his own medical practice that he sold for $12 million. Okay. The tax bill on selling that medical practice for $12 million was shy of about $4 million with everything else he had on his tax return. We were able to get his tax bill down to $88,000. The strategies we used were Platts, charitable lead annuity trust. We used the strategy of having a PFF, a private family foundation. We used the strategies of setting up multiple entities where we structured how his money would flow. And here's the real icing on the cake for this particular client, that we got that tax bill down to $88,000. Not only did we get that down for him to $88,000, IRS came in and they audited that taxpayer. One may think, oh my gosh, you caused the taxpayer to be audited. I was so happy that they audited the taxpayer because we ended up with a no change audit. That meant IRS blessed and said, your tax return was so correct. We didn't make a change to one number, one thing, or just anything on that tax return. That's the level of strategy that we do. I caveat all of that with, when we do that, we are running scenarios. I know all the behind the scenes of the client. I'm looking at multiple years returns. I'm running scenarios. I'm running what if strategies. And I am like vetting it all out from all different angles, finding that optimum thing that they need to do and the optimum amount that they need to do it with. That's the key. And so that's just one example that we've done for clients. And every client is not that extreme. Some clients are even more extreme, and some clients are less extreme. But everybody has room to save on taxes. That's why the acronym starts at the beginning. Once you get to advanced strategies, there's things that you have to be willing to do to mitigate tax. It's no longer about a write-off. No one wants to go out and spend money for write-offs. I don't like that idea. Some people may say, oh, you should go buy some more office equipment. Go buy the office equipment if you need to buy the office equipment, but I don't want you to spend money that's not going to return an investment to you just to reduce taxes. It needs to be in a sequence, in the right order, for the right person. It's almost like doing surgery, right? You got to get that person's baseline, that person's blood type. You got to know what issues they're dealing with. Then you come up with the strategies. Too many people, Jeff, and I don't want to disparage anybody because I think that all tax professionals are great. Too many people, though, are Googling and looking for an exact-like answer, and they may go do it, and it may save them some money today, but 2-3 years down the road, the transactions unwind, or they are audited and IRS disallow it because they didn't do something exactly right. So this is a profession, and I certainly don't recommend doing it without somebody that knows what they're doing, and there are great people out there.
All right, here we go. Ming Chen, do you think the new tax law will start this year or next year? If this year, anyone sold a rental property this year with huge gains and did a 1031 exchange will lose the benefit of the exchange?
I think that the tax law, if it passes, will be effective on the date that it passes. So anybody that has a 1031 transaction that's already completed, I think will be fine. I think anybody that's in a current 1031 deal, a contract, those contracts will be grandfathered. And I think that anybody that does a transaction after the date will be affected. I think we're going to get a date like on or before September 1, on or before this particular date.
All right, here's Lisa. In your opinion, will they tax capital gains upon death like Biden's proposing?
Yes. And the reason why I say that, Lisa, is because one of the issues is that they're saying there's so much deferred tax that we are sitting on as a country. And when I say deferred tax, I mean, if I were to pass, my kids get to step up in basis, they could sell property tax-free, or there's deferred tax because of the 1031 exchange transactions. So there was a study done that said that there were billions of deferred tax dollars that are sitting there, and the government wants access to it. Why? Because they need to pay for the trillions and trillions of dollars of infrastructure bills. So when I look at the policy position of the administration, it makes me think what they're leaning towards. Whether or not Congress is going to approve it, we don't know. But they're leaning towards that with all their other actions and philosophies.
All right. All right. Here's Maria. My main dwelling is worth $1 million. We are retired and building a house in Tennessee. If capital gains increase in California, would I be wise to sell before 2022?
Possibly.
Yeah.
I think that's something you vet out. Absolutely.
A lot of these questions, it takes a crystal ball, so it's really tough to answer them.
Yeah, but you know what they're thinking, right? They're thinking about their situations. They're wondering, what should I do? I think that you get your worst case scenario. You figure out where you are if the law doesn't change. Then if it does change, this is my worst case scenario. Can I come up with a strategy to mitigate my worst case scenario? And then you just move forward in your decision. I like their thought process. They're smart people. That's good.
Mm-hmm. Yeah, everybody. It's amazing that our members are very sophisticated, very, very wise. They've all made that one really good choice, which is getting into rental property.
Yeah.
And so yeah, it's incredible. The people that I talk to, that I engage with daily, it really is cool.
Yeah.
All right. So here's Marie. Do you see changes in QBI deductions for full-time property manager professionals? Is IRS focusing this misused deduction?
No, I don't see any changes in the QBI deduction. That's not going to be the focus. The focus for IRS is going to be enforcement. And when I say enforcement, IRS is comprised of two divisions, really, more divisions, but for all intents and purposes, there's two sides. There's the compliance side, audits, where they want to make sure taxpayers are in compliance. And then it's the collection side. Over the years, they have allowed their compliance side to dwindle in terms of the number of staff. Their staffing levels have really dropped. Audits became less and less. They became more rare. Now IRS is ramping up enforcement on the compliance side. They're ramping up to hire tons of auditors. If you Google it, it's in their news briefings. And they're going to audit these particular industries, small businesses, real estate investors, the construction industry, because they feel like that's the biggest tax gap. That's where they're going.
Great. And here's Lauren. What is the date for your next tax challenge course?
My tax challenge course, the one that we're doing this year, is August 2nd, is when the tax challenge course starts. I don't have another one after that set up. This is something I want to be able to do to help individuals. Every year, I want to do some type of like live give back and really educate, where I will give examples. I will show you how to do things. So that's going to be on August 2nd. We're going to go 3 days live, and I'm looking forward to it.
Oh, that'll be cool. That will be. All right, Cecilia, what if your fee structure to analyze and prepare a strategy? Oh, what is your fee structure to analyze and prepare a strategy for clients? Is it an hourly, a percentage, or how do you do it?
What we do is we have a consultation with clients to see if we can bring clients value. And then we will quote the client a fee at that time. It's a flat fee. We don't do an hourly rate, and we have a scale for those flat fees depending on how involved it will be for a particular client, whether or not I'm the sole person on the plan, whether or not team is on the plan. We work cohesively together. We will never, ever charge a percentage of your savings. That's a violation of Circular 230, for which I operate under. And we will always be forthcoming with the fee at the time that you sign an engagement agreement.
Great. So I think a good thing, you could give her a call and get,
absolutely,
and she'd probably be able to help you like know exactly where you would stand. And then here's a question: when is your seminar in person, and when is it in Zoom? And so
so the 3-day challenge is going to be online. I don't know when we're going to do another in-person presentation. That's going to be up to the marketing team and kind of what they think. A lot of people are really liking this online platform and getting the education. It just really depends on what the market wants to see, the shift in what the market wants to see. And we're prepared to do either when the time is right.
Right. And even for us as AOA, like for our seminars, I think that maybe half the people that would want to show up to something will want to show up. And so that, we're getting close to the end here as well. So even with our $1 Million trade show, we're planning on having it in April in Long Beach. And so that's one thing that we're planning on. But then, we just read in the LA Times this week, I saw that there's a trade show. It was basically, usually they get an audience of 1,000, they had 200. And so it's kind of a bummer when you're used to, everything being nice and packed, and then you go and it just seems like it's a ghost town. So we'll keep monitoring that. And seminars too. I think sometime soon, we can get those going again, but I think we'll wait till we get into the fall before we get there.
Yeah.
All right.
Yeah.
Well, I'll just take one more question. And again, thank you guys, everybody. Thank you. had great questions. Everybody got to ask a question. Let me see with Bethany here. Do you know if the 500,000 1031 limitation is per, oh wait, no, we already asked that. So if I sell 50% of a property in year one, can I exclude a $500,000 gain? Then in year two, if I sell the remaining 50%, can I exclude another 500K?
Possibly. Possibly. Because I believe it's going to be per transaction is how it is currently written. So once that law finally comes out, I'll put out the parameters on what clients can do, and I'll have the strategies laid out for what that needs to look like.
Great, Karla. Well, we know that you have a hard stop. You have something that's coming up here. Any last words parting words before we?
I just stay humble and grateful to AOA for allowing me to share their platform with their audience, to educate and to just really let members know they're in the right place at the right time. The thoughts behind the questions are so appreciated. I love the fact that people are thinking about their dollars. They work super hard for them. I want to continue to give back and help and educate, and I will continue to stay on top of these laws. And I welcome those to join the 3-day challenge so that I can educate them and dive deeper into people's situations and really give more examples and help them. And thank you to everybody who attended today. The key is not how much money you make, but how strategically you can keep it. Do not leave Uncle Sam a tip.
That's right. And remember, if you're not a member, it's time to join for sure. And, membership fees, $79 for the year. There's no per unit. Man, you save 55 bucks right off the top. And, if you join this course with Karla Dennis. And so become a member if you haven't. And if you've let your membership slide a little bit, go ahead. It's time to renew. You're going to see a bunch of little cool things in the membership program. So that'll be neat. And again, it's all about what ideas can we give you to make or keep more than ever before. And Karla, you just hit the bullseye every time. So thank you. And we'll see you next week. Everyone else.
Thank you, guys.
Okay. Bye-bye.